All right, welcome guys, welcome. All right, apologies about that late start. I just recently, actually, a couple seconds ago, I just figured out what the problem was with the mic, but hopefully everything is solved now and we are good to go. Okay, so just did that one last checkup there. Let's go ahead and start off with the markets. So what we're looking at here is a pretty interesting day. First of all, from a technical standpoint, the S&P 500 has clearly made that level, that daily level of resistance at $524. Now, I mentioned this last week on last Thursday's candlestick, and I even gave that possibility yesterday that we could be seeing another rejection at 524, and that's exactly what we did throughout the entire day of yesterday. And that's a pretty good reason why I decided to get into some SPY puts. And today I took profits around 60% plus-ish. I could have gotten out for about 75%, but I wanted to see if there will be an official retest at the daily 21 SMA, but early on in the day, I did not see that, and so I could have waited, but again, this is one of those coulda, woulda, shouldas situations, and you know, hindsight is 2020, always, so I'm not too mad about that. I mean, I can't complain about 60% return overnight, right? Now, I did have some pretty big losses as well on some certain positions that I've had for some time, and I had to cut those losses, but thankfully that 60% on SPY really dampened my my losses there, and today I ended up almost break even, almost BE. So you know, it's one of those situations where you should be glad to have a quote-unquote hedge, right? Since my SPY position is definitely was considered a hedge for me at that point, but I'm sure for some others in the private CFO Discord, it was considered a trade for them, especially if they did not have any other long positions that they had going for them for the past couple of days or few weeks. So today was a bunch of stop losses, a bunch of losses that needed to be taken out, and it was an interesting day to say the least. Now, one single thing that I want to look at on SPY is that today, it was a very tight-ranged day, and you know, when we tend to have a gap down during strong uptrends, we tend to fill in that gap on the same day or the very next day after that. But usually, most of the time, we tend to get that gap fill on the same trading session, and that usually indicates that the uptrend momentum and the bullish sentiment is still very, very strong. However, we did not get that. Yes, we still have tomorrow to see if we do fill in this gap, but this is a huge warning sign based on the price action that we have here for the S&P 500 today. So tomorrow, if we were to look at a gap fill, we need to come all the way up into 520 and precisely hit 520.97, which was yesterday's low point, right? The low of the day, so the previous low of the day, excuse me, and that would actually be pretty perfect for a retest if we do see a gap fill here, because that will also converge right at the daily 10 SMA, which closed at 520.54. So if it's possible for this for the markets to fill in this gap that it made today from yesterday's close, I would most likely want to see that test that 520.97, and obviously the same simultaneous convergence retest at the daily 10 SMA. Now, given the fact that we have also essentially retested the daily 21 SMA, and the daily 21 is now curling a little bit on the flat side, so we're about to flatline here on the daily 21, is also yet again another warning sign, albeit it's not too strong of a sign that we're about to reverse the downside, but that is another sign that we need to stack on top of the fact that we have broken to the downside and we have not seen a gap fill on the same day, right? So again, that gap fill that we did not see today was one of the strongest signs that the bullish momentum has truly started to slow down. And so, if we continue to stay underneath the daily 10 SMA, which we broke today, there is a high probability that we can continue to move down and eventually break below this daily 21 SMA. But again, in the mid to longer term perspective, we have not yet broken below both of my 10 and 21 SMAs on the daily time frame. And that is crucial to understand why, because if we have not yet broken below the daily 10 or the daily 21, the uptrend is still intact. Yes, if we do break below the daily 10, but if we still stay above the daily 21, it's a weaker trend, but still it is an uptrend, right? I mean, there's not much for me to say there, right? So, if we don't see any type of a gap fill, if we leave this gap down, not filled, then there's going to be a huge opportunity for sellers to continue to sell and continue to short until we're all the way back down to around 510, which is the next major level of support, and that should also coincide with this rising daily 50 SMA. Now, if you guys remember from last week's live stream, I also did talk about the fact that, and all the previous videos as well, and if you guys are wondering what videos, the then private but now public technical analysis videos for the CFO Stream Watch newsletter, I've also talked about in those videos specifically that this rising 50 SMA on the daily time frame is a bit worrisome, right? Because we're trying to move away from the daily 50 SMA, but if we get closer, if we start moving down, rapidly moving down, and as we inch closer to the daily 50 SMA, that is going to be a huge cautionary warning sign for the mid to long term. So watch out for this daily 50 SMA as it continues to creep and crawl up higher until at some point, I would imagine, retest with the price. So, today it's pretty interesting to see as well, because a lot of the mega cap stocks were weak along with the market. However, we still saw some pockets of relative strength in the mega cap group alone. For example, Amazon, right? So Amazon had a pretty good day today. Yes, it wasn't green. It almost went green, as it ended up on the day negative 0.15%. Very, very tiny move down by the close. But overall, Amazon continues to surprise us with the strength, and even Google yesterday had an immense breakout, right? And today ended up with a nice inside day candlestick. It looks like some of these mega cap stocks are finding some sort of a foothold here to try to move against the markets, the overall markets, including Meta as well, right? So these three stocks today, it had a pretty interesting relative strength compared to the rest of the other growth leaders and growth groups, right? Like semiconductors, for example, were another area of focus that had a lot of relative strength, and I'm kind of curious as to the reasons why semiconductors were also strong too, but it is what it is, right? We're still seeing that little pocket of strength in these leaders as they hold on to their short-term 10 and 21 SMAs on the daily time frame. And so, like for example, SMH here, right? The semiconductor ETF continues to uphold the daily 10 and daily 21 SMAs, just closing an inch above both of these two short-term SMAs. So, for me, I am still a bit iffy on trying to long any type of these growth tech stocks or overall growth leaders up here. I think there's a lot more opportunities and a lot more higher probability trades to the downside on these leaders, right? For shorts, essentially. And so SMH, SOXL, right? It's the same thing. It's just the leveraged ETF for semiconductors. I want to be able to see if I can short these into this month, right? So for the rest of this month, I want to be able to see some sort of a large pullback, simultaneous pullback from all the growth leaders and growth groups, right? And another one to look at is cyber as well. Right, so cybersecurity stocks, for the first time today, it was able to essentially gap down and close without filling the gap here with that gap down that we saw since that gap down that we saw I believe right here, March 19th. And so today we're actually able to hold above that low that we made in March 19th, and we officially have a nice daily support level at 55.20 on cyber. However, again, you know, these growth leading stocks or growth leaders or groups are all looking a bit precarious up here. So, you know, with the fact that cyber is also staying below and closed below the daily 50 SMA, which has now caught up, as again, I've also cautioned this on the S&P 500, right? This could potentially be what we should be expecting on the daily time frame for the S&P 500, right? So to kind of give you guys a clue here, all right? So cyber looked like this, basically, just like SPY here, right? Where the daily 50 SMA continued to crawl up higher, but it was not within reach of the price. But as time went on, right? As time went on, okay, this is what we got. All right, we eventually retested the daily 50 SMA, and now we're consistently breaking below it and closing below the daily 50 SMA. So that's not looking too good. Right, that's not looking too good. So, you know, this cyber, I would definitely look to short this one. However, I'm not going to touch it. It's a bit illiquid. Again, I have my own set parameters and the rules that I follow. I will only trade stocks with options if I have a liquid volume, right? So this one has an average daily volume currently of only 840,000, and today's volume was lackluster as well, as it was below the average daily volume at 745,000. So you know, obviously when I'm choosing equity, it's slightly different. I have my rules a little bit more loose, but again, if we're looking at a liquid name and if we're trying to trade options on that name, then the option contracts would be themselves liquid too. So that's something that you guys should know and understand. For example, just take a look at Apple's daily volume and average daily volume, and take a look at its option contracts volume and open interest, right? They're very, very liquid. So it's just a very direct correlation, right? So cyber, SMH, right? So the leading groups, cybersecurity, semiconductors, and just the overall mega caps. Today, they were able to hold with relative strength, you know, against any type of hard selling after initially making that low in early morning, or in the early morning after market open. But unfortunately, you know, we weren't able to see that rapid gap fill in the overall markets like the S&P 500 and even just NASDAQ itself. So, you know, it seems like leaders are definitely getting pretty close, especially the leading groups and the overall markets like NASDAQ is starting to get pretty close to finding itself in a downtrend or a textbook pullback, right? So lastly, I want to go over NASDAQ here. We do have the price staying below the daily 10 and the daily 21 SMA again. Right, this is not the first time, but the only difference now is that the daily 50 SMA is really close to the price now, right? I mean, even just the low of today, we were just within less than a percentage point from the daily 50 SMA, right? We're about negative 0.68% from the daily 50 SMA for NASDAQ. So that is very, very close. And it's pretty interesting to see where we will go in the next few weeks and how things will develop. But personally, on my own bias from a mid to long term perspective, we are due for a pullback, and Q2 is a perfect opportunity for market makers to start pushing the prices lower. and a perfect opportunity for shorts to come back into the markets and finally have their way of trying to move the prices lower. All right, so that's essentially the summary of what I want to say about quarter two. I have a lot more data and a lot more information that I want to go over and delve into through the Market Trends newsletter. And if you guys don't know what that is, and if you guys aren't following me on Instagram, make sure you guys follow me on Instagram at ChartsFocus1. But it's a new free monthly newsletter that you guys can opt in by just DMing me. But I go over every single month, one email per month, on what you guys should be expecting every single month of each trading year. So if you guys are interested in that, and if you guys are wondering what you should be expecting for this month of April, and again, the Market Trends email should be coming out in the first week of each single month. So for April, this should be coming out by the end of this week. More specific timing and the day will be posted on my Instagram story. So you guys have to be following me on Instagram at ChartsFocus1. But yeah, so Market Trends, if you guys want to opt into that email, let me know and just send me a DM. That's it. Very, very easy and straightforward. So, overall, the markets were a bit spooked today, right? That's the conclusion that I have for tonight. The markets are very, very spooked, especially with, commodities raging, bond prices crashing here, like TLT and even IEI, the shorter term 3 to 7 year Treasury bond ETF, and obviously the bond yields themselves breaking out to the upside, making a higher high compared to the high that we made back in February 22nd, right? And it's not looking too good. The markets are definitely spooked by these raging commodities, like specifically gold and silver, even rare metals or specific metals that we talked about, like copper, right? Copper and even just steel in itself, okay? So the markets are definitely spooked here. These raging bond yields, raging commodity prices, raging and surging dollar, right? Everything is just combining to be a complete perfect opportunity for shorts compared to longs. So you have to consider all of these different underlying indications that the markets have been telling us since February, right? And if you guys remember what I told you guys back in February, a textbook pullback takes a long time to develop. And so far, it's taken about almost 2 months. So if this is indeed the start of the official textbook pullback, I will be waiting for this 477.50 support level to be retested sometime in middle of quarter two or even at the end of quarter two. All right, so that's all the way up into June of this year. So, it's going to be very volatile. Just the fact that if you guys just take a look at VIX, you guys should know what the VIX is by now, right? Volatility index of the S&P 500. It's this little pop here today, well, quote unquote little. This volatility expansion or vol expansion is worrisome as well. On top of every single thing that I just told you guys about the underlying indications of a potential market pullback, and also literally everything that I told you guys since February. But the volatility index, right, VIX, is kind of the tip of the iceberg, because this just tells you that volatility is expanding, which could be great or not great, right? But in this case, for us here at this pivotal moment in the markets, it's not too good, because usually when we do see that initial vol expansion, we tend to see a lot of market fear coming back in. So it's overall, if VIX continues to stay over or at least retest this 15 value, it's not going to look good for us, as you guys should know by now as well. Whenever we do see that initial pullback in the markets, fear drives the market. So the volatility will expand and we'll see a further pop in the VIX. And those are your opportunities to really understand where I'm coming from a longer term perspective as well. And that's the reason why, and that's the reasons why I've been telling you guys about these underlying indications and problems that the market has literally been showing us and telling us since February. Okay, and just one last thing here. I also told you guys back in February that when I am talking about these underlying indications for the mid to longer term for a potential pullback in the near term future, you guys should remember to always follow the current trend, but at the same time, keep those underlying problems that are currently developing in the back of your head, because when you have such opportunities like today, right, where we see the overall markets gapping down pre-market and then also staying relatively weak throughout the entire session, you can start thinking about and bringing back those underlying problems to the forefront and try to be able to stay as flexible as possible, because if the market switches, it'll be very, very quick, right? The bullish sentiment will turn to a bearish sentiment very, very quickly, and we'll see a lot more selling volume compared to buying volume as well. And that will immediately bring back fear, and we'll see the fear taking back control of the markets, and we'll see that initial large pullback to the downside, and a very rapid one at that as well. So that's the reason why I've been kind of drilling you guys into having you guys think about the fact that you guys should be following the current trend, but at the same time, keep in the back of your head all these problematic underlying indications that I've been telling you about. Well, all of you guys, private members and public subscribers and viewers here, to you guys all, that you guys should have this in the back of your head, right? All these problems. So again, it should be relatively easy now, since, well, hopefully if you guys have been keeping up with what I've been saying and doing exactly what I've been telling you guys to do, mindset wise, it should be pretty easy to switch from a bullish to a bearish mindset, especially if we start to see that bearish sentiment coming in. All right, so with all that now in mind, what I just told you guys tonight, we do have a lot of stocks today that have really just held up quite well. For example, SWKS, this is a lagging semiconductor stock. And today, the gap down that it experienced was just a simple retest of the daily 10 and daily 21 SMA A's here on the daily time frame. So, yes, I don't know whether or not this one will break out in the near-term future. However, the relative strength is notable. And on days like today, it's crucial that you guys are staying on top of stocks that have been staying above, or at least closing above, its daily 10 and daily 21 SMAs, or even the 10 or 21 or 20 EMAs, whatever you guys use, whatever moving average you guys use. Make sure you guys, again, it doesn't really matter what moving averages you guys use. I use the SMAs. Some of you guys might use EMAs. Some of you guys might use DMAs. It's all the same to me, right? As long as you guys understand the significance of knowing the reasons why you guys should be identifying and looking at, and again, remembering the tickers that were able to stay above and close above, most importantly, it's short-term momentum moving averages. So for me, it's the daily 10 and daily 21 SMAs. So SWKS is one to be looking out for. Even MU, right? MU is a very strong stock, semiconductor stock. Marvel was another one today. Stayed above the daily 21 SMA and bounced pretty well and ended up positive. And also stayed above the daily 10, obviously, since the daily 10 is now catching up after that massive move to the downside on earnings. And there are a plethora of others that have also stayed above its daily 10 SMAs and daily 21 SMAs. For example, Okta, actually not Okta, excuse me, Dell. Okay, Dell is a strong one here. Dell, I believe ORCL today was also something that I was looking at. Yeah, so ORCL in the middle of the trading session today, I saw this one pop up, staying above the daily 10 and daily 21 SMAs, or at the very least, staying above its own relative daily 21 SMA and staying in between its daily 10 and the 21, giving it some good relative strength compared to all the other stocks that have either broken below the daily 10 and daily 21 or even broken below its relative daily 50 SMAs as well. And there are some that have broken below the daily 50 SMAs, I believe like stocks like Confluent. Yeah. So there are plenty of leaders, right? These tech leaders that have broken below its daily 50 SMAs as well, which is, again, a pretty bad warning sign overall. It's one of the major warning signs that we've gotten in the past month and a half. So again, just overall today, it was kind of a weird day, I would say, a very surprisingly weird day, since we did not see broad participation from buyers or from sellers throughout the entirety of today. And we saw really just relative strength just scattered everywhere. Right, we saw especially consumer stocks getting better today, right? Starbucks, another one just absolutely pushed lower. It should be hitting that $85 soon. If you guys remember, my Starbucks was a 2-point game plan. This was originally in the CFO Swing and Watch newsletter back in February, and so far it's working out. It's working out as a 2-point game plan for initial short for the first trade, and once we do see profit taking coming in for the short, and then we see a pivot, then we'll switch to the part 2 of the game plan by longing, right? And I went over this a couple of times in the last few live streams, and also in the technical analysis, the then private but now public technical analysis video for the CFO Swing and Watch newsletter. And so, Starbucks, what else here? Bros, right? They're all kind of breaking down today. Even if they do have overall relative strength in the longer term, the short term will matter, because if the short term continues to move to the downside, then the longer term trend will also be broken. So again, just overall, my general summary of today was really widespread relative strength. We saw relative strength within individual groups or individual sectors, just absolutely spread out to any stock in its own sector, right? I mean, if we saw names that were liquid and illiquid seeing relative strength on its own, we saw stocks that shouldn't have seen any type of relative strength seeing some pretty good buying, some very non-popular stocks seeing some very good buying. I mean, it was just all over the place, right? So this is usually an indication that the market is kind of in just unorganized fray. And it usually indicates and tells us that we are expecting to see some volatility expansion, a vol expansion. So this expansion of the vol, I've been mentioning this for the past couple of weeks, is going to be pretty critical, since that should also bring in the ultimate factor that can play into the downfall of this uptrend, which is sentiment. Right, I've already mentioned this a couple of minutes ago, right? Sentiment. So yeah, I mean, that's kind of it for tonight, guys. It was a pretty uneventful day for me. I'm glad to have, again, broken even here today thanks to that SPY put. But I was able to take out quickly early in the morning a lot of the losses, and obviously try to do some damage control. But overall, quarter 1 was amazing. So quarter 2, not a good start, but I'm really glad how I was able to really just quickly manage my losses and keep my my wins, my gains, and especially the SPY put trade was a great gain today with that 60% plus overnight. But again, overall, I think I did pretty good today, and hopefully you guys were able to do a lot of good damage control if you guys were long as well, since again, the markets are still moving to the upside. It sounds crazy, right? But it's a news flash, right? I mean, we're seeing a lot of people already talking about this huge market crash incoming, but I don't see any confirmation of that yet. Why? Because we have, again, retested and pivoted away from its daily 21 SMA. Right, SPY has pivoted away from the daily 21 SMA after retesting it basically today, and closed above it. So as long as we stay above the daily 21, we're still considered in an uptrend. Even if we start moving sideways for the rest of the month, we're still considered moving to the upside. We still have the bullish momentum. But if we start rapidly moving below the daily 21 and we eventually break below the daily 21 with good selling volume, and we close below the daily 10 and daily 21 on huge selling volume, then we will know for sure that we are in for a reversal to the downside. Okay, and last but not least, based on today's closing price here, I want to give you guys a quick visual before I end the live here. It moved back down to 477.50, is still at negative 8%. And if you guys remember, I did not want to raise my floor here of 477.50. Because again, a textbook pullback has a textbook percentage range of 5 to 10%. And we have yet to see any type of a number that's larger than 10%. In fact, we haven't even hit 10%, even if I go all the way down from the all-time high number of right now. So look at that. So negative 9%, right? Negative 8.98% if I just want to round up 9%. So, you know, I'm just kind of shrugging here. I know you guys can't see me, but it is what it is. We are still looking for that mid to longer term pullback for the rest of quarter two. That's my personal bias. But again, this textbook percentage range of 5 to 10% has not been broken. So I repeat, I do not have to raise my floor yet of $477.50. Is that understood, guys? Hopefully it is. Very much so. But yeah, I mean, that's kind of it for tonight, guys. If you guys really want to read the market trends email for this month of April, make sure you guys DM me on Instagram. I will have a specific web page set up for you guys to opt in whenever you guys want to opt in at your own time and your own disposal. Discretion. Disposal. I'm thinking about what? Trash disposals? Anyway, guys. Anyways, the Market Trends newsletter, this monthly free newsletter, you guys won't be spammed. It's only one newsletter per month. If you guys really want to get some good guidance every single month of every single trading year, especially for this fiscal year of 2024, make sure you guys DM me on Instagram. You guys will find every single monthly newsletter very, very informative, and most importantly, hopefully you guys know what I'm about to say next. Applicable, right? Applicable information is the most important thing on this channel and for Charts Focus 1. With that, thank you guys so much for watching. I will catch you guys on Thursday as usual at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Have a great rest of your night and good luck tomorrow.